Bastion Market Daily Live Forex Market Outlook by Trader Plato. Introduction. The purpose of the market outlook is for us all to have an elite mastery of the forex market to an advanced level. The forex market is a decentralized market that runs 24/7 from Mondays to Fridays. It has a market capitalization of approximately $8 trillion daily. Dominant and non-dominant market participants. At the top and in the middle of the hierarchy, we have the dominant market participants. That is the central banks and the large financial institutions. At the bottom, we have the non-dominant market participants. Those are the retail traders. In a nutshell, the dominant market participants make up of 95% of the market participants, while the remaining 5% are the non-dominant market participants. Those are the retail traders. This is according to research and data from the Bank of International Settlement, the Bank for Central Banks. Market mechanics. Market mechanics is a unique hybrid trading strategy that utilizes technical and fundamental constants to generate accurate trading signals. Power of 3, AMD chronological order. On Fridays, we have the accumulation phase. On Mondays, we have the manipulation phase. On Tuesdays, Wednesdays, and Thursdays, we have the distribution phase. Therefore, we do not trade on Fridays and Mondays, as these are the accumulation and manipulation phase of the market. Power of 3, AMD chronological order. The Asian session is the accumulation phase, the London session is the manipulation phase, and the New York session is the distribution phase. So we do not trade the Asian session, as this is the accumulation phase, but we are allowed to trade the London session since it sometimes overlaps with the New York session. Power of 3, candlestick pattern order. Unique candlestick reveal mass psychology that symbolizes the power of 3, the accumulation, manipulation, and distribution. Below are the images of the candlestick showcasing the mass psychology and movement of the market. We have the bullish and the bearish candlestick patterns. Liquidity and trap zones. All the market concerns about is liquidity and nothing else. Liquidity is basically points in the chart where majority of orders are pending to be filled. Thus, liquidity is the energy of the market. Without liquidity, the market will not move. These zones are as follows: yearly high and low, monthly high and low, weekly high and low, daily high and low, swing high and low. Welcome to the chart. To begin with, let us focus on this black cursor, as this will serve as the hands of our tutor while we are learning. As we are aware of, in the market mechanics, we focus on liquidity and trap zones, as these zones offer the best opportunities in price. Liquidity zones are the most sensitive zones on a price chart, just as the human eyes are one of the most sensitive areas in the human body. If you poke an individual in the chest, he might not react or respond. But if you poke an individual in the eyes, there must be a reaction, as this is a very sensitive part of the human body. That is just how liquidity zones are in the chart. They are the most sensitive areas in the chart, and they offer the best opportunities in price. So now let us keep an idea in mind, as the market buys to sell and the market sells to buy. So now on Euro USD, from the previous week, we can see the liquidity zones. They are marked out in this red box. The red box here is the weekly high of the previous week, and the red box below is the weekly high of the previous week. Let us take less than a minute to explain candlestick pattern. As you can see, an accumulation of price within this area and a cluster of white candles. These white candles signify selling pressure, and as you can see, price rallying up, creating this cluster of green candles. These green candles signify buying pressure. Now back to the market outlook. As you can see, price closing for last week within the range of the high and the low of the previous week. So now by the market open, we expect an accumulation of price within this range. And if price does that, price could generate a pattern for the day for price to buy and retest this resistance right here. This resistance right here. However, this is not much of a strong resistance. So price could break the high of last week higher to generate another pattern for a sell. However, if that does not play out, you could expect price to drive down to fill this liquidity void, this area of imbalance, for a retest of another block on a lower time frame. However, there is no strong support in either of these zones. So price could break the low of the previous week to generate a pattern for a buy. Mind you, the aim of this outlook is not knowledge but great action. So mark these zones on your chart, observe and watch out for how patterns react within this zone. Patterns, I mean price. Watch out for how price reacts within these zones. If price drives up impulsively and breaks the high of the previous week, we can conclude that price is going to continue buying. However, if price accumulates and slightly breaks the high, generating a pattern, then we can watch out for a sell if all criteria and rules are met. And that applies for the low as well if we are expecting a buy. As we move on to USD CNH, we can see that last week price also closes within the range, within the middle of the weekly high and low. As we can see that price gave a rejection after breaking the low of last 2 weeks. However, this is not much of a strong support. So if price drives down to this area, we can expect this area to be broken. Nevertheless, by the open of the market on Monday, price would consolidate as we are expecting around this area to either drive to either of these liquidity zones. If price drives to the high of last week, breaking it in an accumulation manner and generating a pattern, we can expect a sell. That is a buy to sell. And if that happens inversely, price accumulating down to break the low of previous week, then we can expect a sell to buy if all rules are met. Nevertheless, on USD CNH, on the bigger picture, price is in an uptrend. So this is more of an accumulation. Price is looking for a strong support to continue the move upwards. On USD CAD, after price broke the high of the last 2 weeks, price generates an impulsive move to the downside, rallying down, and we can see that price closes in the middle of the weekly high and low, not close to either of those zones. So by the market open, you can expect an accumulation of price within this range for price to look for a support around this fair value gap. If not, price could accumulate further up to look for a resistance. However, If price breaks the high or the low, we can expect a generation of a new pattern, either a buy to sell or a sell to buy. Nevertheless, mark these zones and watch out for how price reacts within these zones. On gold, we can see that on the bigger picture, gold is in an uptrend. So this accumulation right here is more of a retest for a strong support for gold to continue the rallying up. However, in the forex market, anything can happen. So on gold, we can see the weekly high, the previous week's high, and the previous week's low. Price closes close to the low of the previous week. So by the market open, we expect an accumulation and for price to drive to this liquidity zone to stop out the buyers in this buy candle and manipulate sellers to take more positions and for price to reverse back in an uptrend if all rules are met. Nevertheless, price could accumulate to come and fill out this liquidity void and retest a resistance within these zones. However, there is no strong resistance in these zones. So, price could drive further up to take out the high of previous week to continue a sell. These are possible case scenarios to play out. You have to keep in mind that the market mechanics is one of the best strategies to analyze the chart, as you are going to leave no stone unturned and you are going to perceive the market from the perspective of the buyer and the seller alike, and this creates a flexibility in your analysis without having a rigid mindset once taking a setup. So now let us move on to silver. On silver, just like gold, we can see price closing near to the low of the previous week. So we expect an accumulation within this range and for price to take out this low to create an accumulation, manipulation, and distribution to the upside. If all rules are met, then we can expect silver to sell up, to fill out this liquidity void, and retest a resistance for an accumulation within this range. However, there is no strong resistance, so that is our expectation on silver. Nevertheless, if price breaks the low of the previous week impulsively, then we can expect a continuation of the downtrend. On GJ, we can see the high of the previous week and the low of the previous week marked out in this red box, and the market closes near to the low of the previous week. So we expect an accumulation within this range and for price to come below to manipulate more sellers, grab liquidity, and drive back to the upside. If a strong pattern plays out and all rules are met, then we can conclude that the GJ is going to buy further up. However, if reverse is the case, we can expect price to accumulate up and look for a resistance to continue the downtrend, or for price to take out the high of the previous week to generate another pattern for a buy to sell. On DXY, you can see price looking for a support after making an impulsive move in the previous week. However, seeing the high of the previous week in this red box and the low of the previous week in this red box, and market closing in the middle of the high and the low of the previous week, you can expect price to accumulate and fill out this liquidity void, as there's an area of imbalance within this zone. However, price could drive down to take out the high of the previous week to create an AMD for a sell to buy, as there is no strong resistance in these zones up here. So in the market mechanics, we analyze the chart with our naked eyes and we analyze a naked chart, as candlesticks offer visual representation of all ongoing transactions in the forex market. Meanwhile, indicators are lagging, not giving you the precise data needed for a comprehensive analysis. Moving on to GBP USD, you can see the high of the previous week in this red box and the low of the previous week in this red box, and price closing near to the low of the previous week. So we can expect an accumulation when the market opens, and for price to take out the low of the previous week to generate a pattern for a sell to buy. On the other hand, we could expect price to accumulate and fill out this liquidity void, as there is an area of imbalance here, and after filling out this liquidity void, for price to accumulate and generate a new pattern accordingly. On BTC USD, you can see the high of the previous week and the low of the previous week. The high of the previous week in this red box and the low of the previous week in this red box. And price accumulates close to the low of the previous week. So you can expect price to take out this low and generate a sell to buy. On the other hand, price could accumulate and generate a new pattern for the week to follow in the direction of the new pattern generated if all rules are met. On NZD USD, you can see the high of the previous week in this red box and the low of the previous week in this red box below. And price closes near to the low of the previous week. So by the market open, you can expect an accumulation, and for price to generate a sell to buy after taking out this liquidity zone, and for buyers to reverse the dominance and take charge of the market if all rules are met. However, by the market open, price could accumulate and fill out these liquidity voids up here, as there are a lot of areas of imbalance in these zones. So for NZD USD, we can expect a sell to buy by the market open, as there are a lot of money sitting down in these zones. So price most likely will drive to these zones to fill it out and to create equilibrium in the market. Have a peaceful week ahead.